Hey guys, it's Mary Beth from Bulls on Wall Street. I just wanted to take a minute today and review a quick concept with you guys. If you're a new trader, this is a concept that you really want to understand when you start out. It took me a while for me to, for the light bulb to go off in my head and actually realize why we actually trade momentum stocks in day trading. So this quick video will explain it to you and explain how momentum comes into a stock and why it's important that if you are aspiring to be a day trader or even a short-term swing trader, that picking a stock that has momentum is really critical. The first thing that you need to realize is that when momentum comes into a stock, it can be caused by two different catalysts. Okay, one of the catalysts that we trade often is a PR or earnings breakout. So if there's a PR or an earnings report, that can cause momentum to come into the stock, or if there is a big chart breakout, like a big bull flag, bear flag breakout, a big triple tap breakout, that can cause momentum to come into a stock. Okay, so let me show you a few examples of what I'm talking about. The first one that I want to pull up is, this is an older chart, but it's a great example of what I am referring to. This is a stock called YRCW. And as you'll see, right, back the beginning of this year all the way until April, there was no momentum in the stock. The volume was completely dead. Okay, and there was no patterns that formed. So patterns is a subject that you'll hear a lot of traders talk about, that we trade patterns as day traders, and there was no patterns that mattered. The moving averages, it sliced right through the moving averages. But all of a sudden, on these charts, this little symbol right here, this stands for an earnings report. So all of a sudden, when the earnings report came out, the complete nature of the stock changes. And momentum comes into the stock. So now look at all the volume that has come into the stock, okay? And now you'll see the patterns that form, they actually work. So the probability of the patterns that you learn actually working escalate when you have momentum in the stock, okay? So now you see a bull flag or a triple tap breakout, it works, or a pullback to a moving average. The moving average serves as support and it bounces off of that moving average. Okay, so this is momentum caused by an earnings report. The second thing that you have that can cause momentum is something similar to a chart breakout or a chart breakdown. Okay, so on this chart, all right, we just have the stock in a downtrend, and then all of a sudden it breaks this major level of support. It breaks down and it completely flushes when it finally breaks there. Okay, and that helps us develop areas and moving averages that actually work as support and resistance. So once the stock breaks down, all right, then it bounces back. It bounces back into a moving average. It bounces back into the previous breakdown area, which now has become major resistance. And so now that pattern, that breakdown pullback pattern, will actually work because of the catalyst, the big breakdown, causing momentum to come into the stock and causing it to be volatile. Okay, so as day traders, we don't want to be stuck in stocks that don't move, right? We want to be in stocks that are moving. And the way that we pick out these moving stocks and the way that we pick out the charts that we want to trade with the patterns that we know is by finding stocks that have momentum, such as this.